Welcome to this week's Office Hour call. We do this every single Wednesday at 12 p.m. Central Standard Time. This is for the Oat Inner Circle members, aka anyone with an Oat Unlimited member subscription. Basically, what we do is we walk through the market, we walk through our options bot portfolio, and we go through what is happening right now and if there's anything we need to adjust. Now, Monday, Tuesday, and Wednesday, particularly Monday, we had a very crazy market, so we have some things to cover. Let's dive in. Okay. With that said, we first talk about the market overview. Once again, I do want to apologize for the echo. I will get improved next time. If we're looking at the market here, you can see this is the ES futures. If we're looking at this graph here, when I took this about an hour ago, it's trading around 6,765. If you didn't know, with previous weekly calls that we were doing, I was saying we're going to watch for a level at 6,800. Once it breaks below 6,800, we're going to lean more towards the bearish side. And so with that said, we did break below 6,800. We are now holding below that level, which means that although we are in a bullish market by just criteria of our indicator, which tells us the general zones that we're in, we are leaning more towards a bearish slam, which means if you want to be more safe, you can start actually activating your bearish spots and manually entering them in now. If you want to just get a head start on that, just for some extra protection. Now, again, your bearish spots, meaning if you have a bearish spot set up based on our portfolio, it's going to automatically start triggering at about 6,600. Once the market breaks below there and enters this red zone, your bearish spots will start to enter. But if you want to get one trade off now as a heads up, you can. So market trend, we are currently in a bullish trend based on the market analysis indicator you're using. If you're wondering what this is, the market analysis indicator is essentially a 200-day moving average as our middle line. This is what is regarded as the industry standard for understanding a trend. If the market's above it, we're trending up. If the market's below it, we're trending down. We added some standard deviation lines to understand, hey, this green zone means we're trending up. Red means we're trending down. Green means we're rebounding. So we hit our bottom. We're now going to hit up. And red means we've overextended. So we're going to pull back. And so we're in the green zone right now. But my thoughts that since we officially broke down below 6,800, which is a support level, we are nearing our bearish market, which will officially start around 6,600 per the rules that we follow. Now, the options spot portfolio, you can see here, I took this screenshot just an hour ago as well. My portfolio is down about $1,700, mainly due to the futures put credit spread bought. But what we're really looking at is what's not showing in open P&L is that my futures bullish spot, I had 3 trades that hit my stop loss. Again, this is the difference between a 200 and 300% stop loss. A 200% stop loss will help cap your losses that you don't have huge losses, or not massive losses. They're still pretty decent size. But with that, it doesn't give you any wiggle room. So I had a 200% stop loss set up on mine, which is fine. That's how I manage my criteria. And then 3 of my trades did hit the stop loss at about $4,000 a piece. So that was a $12,000 loss total on the futures bullish spot, which means by my estimates, if the futures bullish spot continues positive for the rest of the year, then I will break even / make a profit on it because I need about 10 more winning trades on the futures bullish spots that overtake those losers and to recover from that. So it's definitely something that is easily possible. Last year, I did 30 to 40 of these trades and they were all winners. And I did have my first set of losers here, which does happen, but I'll probably get break even a profit on the bullish spot here in the next 6 to 7 months is the goal, right? I'm doing about 2 trades a month. That was sad, but I do see a positive upswing for that. Futures book credit for bot, none of the trades closed. Again, this is because when you're using defined risk, I like not having a stop loss because we're already using defined risk as that, which means that these trades, they went down, they were down a bit, but then they recovered with the market, and now they're just playing based off time decay. So with that said, allocation 65,000 is still in options bots. On average, it's making about 3,000 a month. Obviously, we haven't had many trades closing this month, so really no profits so far this month. We have 90 grand in SGov, making $300 a month. That just happens regardless, no matter what the market does. So we are still making that. And then I have 45K in cash for safety. Again, that's for margin in buying power increases with futures options. Here's my thoughts. Again, my favorite setup is to remove the stop loss in general and use DTE as the exit criteria, which again is the futures put credit spread bot. Or you can even do this with the futures bullish bot, or even just a single naked put. This is what Tasty Live does, where they just make sure that they are managing their risk based on how much buying power they're using. Let's say you have a 100K account, you're okay drawing down 30K, then you would maybe only do one futures bullish spot trade at a time. but then you could remove the stop loss and just close it at 21 days. And then you have to manage that. So again, still a fan of stop losses on undefined risk trades like futures, bullish spots. If you want more safety, 300% stop loss will be good. To my knowledge, nobody with a 300% stop loss on the futures bullish spot closed out. Got to around a 200, 250 stop max. It came back up when the market shot up on Monday morning. So again, just your buying and stop loss is needed. But I do love when we can use like a futures but credit spread bot to supplement this because again, they're not hitting their stop losses. They'll just let the trade go on. The bot overview. So we're looking at the leaderboard for this week. It's cool to see what's happening. So we have the bi-weekly Rainmaker as the top two, about 4,200, 4,100 top two people so far this month. Again, we're almost 2 weeks in. Then we had Walmart 45 DTE naked calls, basically a bearish position being number one. So again, the bi-weekly Rainmaker. So we had two strangled, which plays both sides of the market. So that's thing right now. And then the Walmart naked call bearish for Scott. Crushed it as well. The next boss would be the bearish spot. Bi-weekly Rainmaker 3-4 pounder, which is more of a bearish spot. And then shorter term trades. Those are the bots that are working very well right now. Again, firing off the bearish spot for protection. What Mamuka did, you just do things like that to help with the protection. So my thoughts is our options bot portfolio is simple. Bullish spot and bearish spot allow them to run. This is a great example of managing allocations. So I know that when we get into these hectic times like Sunday overnight / Monday pre-market, a lot of trades were down. A lot of people were wondering, how do I manage this? You shouldn't need to worry about that because the question is not how I manage this, is did I set up allocation correctly when I first got into these trades? So what that means is I know my stop loss amount for each trade, and I'm okay with all my trades hitting the stop losses. I know I can recover within the next year based on my typical returns. I'm already managing all that risk within the amount of trades that I allow to have open. Again, that's why I manage risk very tightly for the futures bullish spot going into 2026. I said, hey, I want no more than three positions to open at a time. That previously had 6. And so I wanted to decrease that risk to give me more comfort so I could just let the trades play out. And I wouldn't be questioning it as much. And because I did that, right, my loss was only 12,000 instead of having 6 open trades, each at a stop loss of been 25 grand. Now it's going to be way easier to recover for the rest of the year. So if you're worried about your positions, make sure you look at how much buying power am I using. If all my trades hit, my stop loss is at a number I'm comfortable with. If not, I may have to dial it back and just allow it to run because typically we see a huge crash, volatility spikes, then we have a nice taper off and a reset, which allows our positions to gain some steam again. Anyways, with all that said, the market is technically long-term bullish, but I am leaning more with a bearish slant, looking for that $6,600 level to break on the ES futures. Bearish spots will start activating at that time. So there's really nothing I need to do there. And then coming from the market is bi-weekly Rainmakers doing the best right now. Make sure that your allocation and your stop loss limits are within an actual acceptable limit for you. And if not, close out some positions that are either in winners or close to it so that you can take some risks off the table so that you're more comfortable holding all the way through. Anyways, that is our normal spill. Looks like we have Bobby, Dale, Robert, Scott, Troy, and Barra on the call. Please let me know anything in the chat that I can help you guys out with. I would absolutely love to help. Looks like Bobby put in a huge message. So let's get to Bobby first. Bobby says, my broker account at Tasty Trade was flagged with pattern day trader equity maintenance call, even though I didn't make any trades on the 9th. I don't believe the bot did. From what I understand, it's based on trades within a rolling 5-day window. But I wanted to reach out and see if you might be able to help me review what trades might have triggered it through the program, or if there's something I should be doing differently when executing trades through the system to avoid PDT restriction. Okay. So I don't know if it was flagged with an equity maintenance call, Bobby. I don't have your account pulled up right now, but what I am saying is that, or what I'm asking is, did you have any trades that opened and closed on the same day on the 9th? If they flagged it then, because they'll flag you on that day. So a PDT rule is opening and closing a trade on the same day. So if the bot did that, or the options auto trader did, that'd be a good thing to look into. From the options auto trader perspective, though, we do look at PDT restriction. Like we do look at the account. And if you are close to that limit, meaning you already have 2 trades on and doing another trade, yeah, Bobby, I can definitely look into that. I don't have it pulled up right now on it, but it might be something to do with just the buying power being used. They needed more margin in the account. It may have not actually been a PDT thing. But yeah, the options auto trader does look at PDT restrictions before placing a trade to make sure that you don't go over that limit. For instance, if you're at 2 day trades and you still have 5 days left and you can only do one more, that means you can only do one more trade per PDT rule, and you're doing like a 1 DTE or a 0 DTE, then it won't let you do that. Like it won't put on that trade because it knows that there's a potential for that trade to close and trigger PDT. The options auto trader does look at that for you. But yeah, I'm not too particular. I think it might just be a margin call. Scott says, did the login session timeout change recently? I used to pull up OAT on my phone each day and check positions, and now it's asking me to log in each time, whereas before it was still connected. I have not changed it. It should reset every 6 hours, is how it's always been since the beginning. So if you were logged in longer than 6 hours, I don't know how that happened. But yeah, so the login session since day one has been set at 6 hours. Just for security and stuff. Let's see, Robert says, whoa, we got a lot of messages. Here we go. Let's start with Robert. Robert says the pattern day trader rule is in the process of being replaced by a new rule expected to be implemented in early/mid 2026. FINRA proposed replacing 25,000 minimum with a new intraday margin requirement. A change currently under the SEC. Interesting. I did not know that. Yeah, it looks like PDT could potentially be going PDT update 2026. I'm curious. FINRA is expected to finalize changes early, which may lower the required equity for margin accounts from 20,000 as low as 2,000. Oh, that would be crazy. Again, this is something that'll be handled by all brokers. If this does get implemented, I will have to make a change in the options auto trader because we do look at the broker, but then we also do our own check based on how many trades we've known that have gone through and stuff. Yeah. So if this goes through, that will be updated on the broker side and updated on our side. Yeah, that would be great for a lot of people. Thanks for letting me know, Robert. I had no idea. Dale says, I'm going to have 3 futures put credit spread trades that are going to close at 21 days with big losses. When we're near the lows of last week, I decided to take a risk and moved it to 14 days, thinking there would be some kind of bounce coming. Risky, I know, but so far worked out. Got out with one very small loss, another with a small profit, another still open. Am I crazy for doing this anyway to automate this depending on how far away we are? Yeah, so it really just depends on how you're running it. There currently is no automation to change the DTE based on the market. You typically just find a standard one and you go with it. So 14 days is the one that you're rolling with. You can just keep it at 14 days. But no, there is nothing crazy for doing that. Really, you could have it go all the way until expiration if you wanted, because the way that we manage risk on a futures but credit spread bot, it's all done based on the spread. And so what I mean by that is we look at, okay, what is the width between the strike prices? That is our max risk. And so that risk is what we're using for our stop loss. So we factor that in already to make sure we don't put any more, or the number of trades on which that max loss we hit we're comfortable with. So technically you can take it all the way to the expiration date to let data decay do its best. And you definitely have a higher win rate there. So you can do that as well. Just be aware that's fine as long as my advice would be whatever you do, just stick to it. So if it is 14 days, if it is 7 days, if it is 21 days, whatever your early management, just set it and let it go. First is there any way to get an alertless notification when the zone change in the OAT indicator? You can do that through TradingView, but not through the options auto trader. The options auto trader only sends alerts on trades and things, not the overall market. So if you're on TradingView and you want to set this up, we can simply click on this. And then we can click on alert and we can do the market. And now actually let's start with price. Yes, crossing down on market indicator, upper band, lower band. We'll just go 200-day SMA below, save chart 1 day. Great. And so we have that right there. Once the market goes down below this, it would initiate an alert for you on TradingView. That's awesome to be to do that here. So you can do that there. Scott says, will bots manage the slow positions after hours? I noticed it works this way in the paper account. Yes, if you're running futures assets, which on most of yours are futures. I know Scott, except maybe the WMT, which he did, but on tastytrade, if you're doing futures options, the bots will close overnight. But again, that's done because a lot of crashes happen overnight. So we can get out earlier instead of having to wait until the market opens when the market's really down. And it really gives us an edge and advantage to decrease our losses. And yeah, that does help. Yeah. Please be awesome. Any other questions? Feel free to put it in the chat. Trying to see where else we got here. Yeah. Yeah. So I had these trade close here for losers, about 12,000 total. Then my next trade got put on about 10 more trades and I'll hit break even doing 2 trades a month. I'll probably get back to break even around 6 to 7 months. So by the end of the year, I'll definitely be in the positive, not crazy amount, probably 2 to 3,000 for this spot, which is sad. But again, not 100% win rate in 2025. So, it is what it is. But anyways, yeah, so that's there. This is coming back up. All right. Any other questions, team? We still got a good amount of people on here, and I'm here to answer any questions. We have Bobby, Dale, Robert, Scott, Phone, and Vera. See here, Scott says, in testing the daily income bot and paper, I noticed losses are different. On 3-4, I took a loss of 130. My live account for the same trader loss was 465. Raising this to confirm some paper results may differ. Yeah, great question. Paper, again, tries to simulate live results as best as possible, meaning we give you the worst spills on both the entry and exits in paper trading to best simulate getting bills in a live market. We get better than worst bills in a live market, but we try to simulate it that way. But it may not be 100% accurate because we can instantly close a position versus something like, let's say, a live trade where we do have to negotiate with price a little bit. But yeah, I don't know if that's from an overnight move or what. If that was from an overnight move, that may make sense. But it's from an intraday. It happened on the next day's open, so prices can vary a bit. Yeah, okay. Makes sense. I'll look into that because I'll see if I can make that more accurate. But yeah, that's probably as much an overnight thing. But let me get my notepad out here and I'll make a note of it. I think I'm saying maybe Bobby's thing to look into that as well. So Scott. Next day, open paper discrepancy. And then I have Bobby PDT check. I believe it's fine, but we'll look for information part 2. Wilson. Yeah, other than that, the market may chill out. The market may go down. If it does go down, like I mentioned, bearish waffles are activating here. And then we'll get a lot of protection. Here's an example. If you want to look at that, Mamuka is running that bearish buy. You can see here, starting one earlier, it's up $1,000. So the market hasn't really crashed too far. It's starting at somewhere around here. So if the market continues to drop, that can pay out each bearish spot, depending on how you're set up. Obviously, each person set up for different tickers, different assets, things like that. But it could generate anywhere from $2,000 to $3,000 of profit per trade. So that can really help cover losses depending on other trades you have on. Outside of that, any other questions? All right. Thank you guys so much for tuning in for today's fall. I know it's a little echoey in here. I will get a rug or something on the wall here to break that up. But anyways, crazy market. Glad you guys are staying through. Again, just pick the right strategy. Number one, make sure your allocation is correct. Look at the stop losses of all the open trades you have. Is that something you're okay with hitting? And then if that's not, then trim the position down a little bit, update your settings to reflect that, and then just let the bots ride and then just see how time goes on. Anyways, thank you guys so much for showing up. It's always fun to have you guys here. I'll get back to Bobby and I'll get back to Scott once I have more on those things. But other than that, have a great rest of your Wednesday and a great rest of your week. See you guys.